What you need to know. Upcoming changes to how we use our debit cards. There was an amendment passed in the Dodd-Frank Wall Street Reform and Consumer Protection Act called the Durbin Amendment. It was passed a few years ago to protect small businesses from high processing fees and have the savings trickle down to the retailer and ultimately the consumer. However, it turned out differently than expected. The real winners are primarily the banks and big box retailers, and research indicates that consumers are seeing little to no benefit through pass-through savings, nor have small businesses experienced any decrease in interchange costs. So what went wrong? How did a simple amendment intended to save consumers money end up saving large companies? Welcome to another video of Finance Sense, where we discuss all of the most recent developments in the world's economies and financial markets. Don't forget to give this video a thumbs up, subscribe to our channel, and click the notification bell to stay up to date with our videos. Now, let's begin. There is a fight behind the scenes for something called the Durbin Amendment. This will have an effect on all debit cards as well as the fees that consumers pay for using them. The Durbin Amendment is a component of the larger Dodd-Frank Wall Street Reform and Consumer Protection Act. And in light of the worldwide economic collapse that occurred in 2008, Congress finally passed this in 2010. It was intended to greatly increase the safety of our financial system, because prior to that time, banks and other financial institutions engaged in shady practices that got them into severe difficulties once the bubble burst and made it extremely difficult for general public to regain faith in financial institutions. The Dodd-Frank Act was passed to ensure that anything similar wouldn't happen again. Moreover, the Consumer Financial Protection Bureau was established by the law to ensure that financial institutions treated customers fairly and did not misuse our personal data. But the Durbin Amendment, a component of that law, reduced businesses' costs to take debit cards. Have you ever gone to a store using your debit card to pay for something and the person working there informed you that there is an additional charge of 50 cents for using a debit card? If so, you've probably encountered this situation at least once. This is because when we make a purchase using a debit card, the merchant must pay a small fee to the issuing bank. The maximum cost is 0.05% of the overall transaction, a flat fee of 21 cents, and an additional penny for fraud protection. This is referred to as the interchange fee, which is also referred to as the swipe fee. But it is not a swipe fee. There is a lot more to it than that. Now, the financial institutions impacted by the Durbin cap were the large banks that received taxpayer bailouts in 2008. In other words, financial institutions with assets worth at least $10 billion. The Durbin cap had no impact whatsoever on the smaller banks with less than that. The interchange cap is generally the first component of the Durbin Amendment. However, there is another component of the Durbin Amendment that many people are unaware of and have never heard of. To start, as stated in Part 2 of the Durbin Amendment, you are required to utilize an unaffiliated debit network routing. The rule says you must go through at least 2 independent network sources to use your card issuer's services. It also prevents the card issuer from limiting customers' options. As a result, if you run a bakery or a cake store and want to accept debit card payments, having more options for how your transactions will be routed implies less of a burden on your business financially. Also, if you have to pay fewer fees, you may pass those savings on to the customer by reducing the price of the cakes. Before the Durbin Amendment was introduced, banks and debit card issuers were quite sly in how they operated since they had control over the routing of our transactions. They chose the most expensive option since it would earn them the most money. For instance, when purchasing a debit card, a customer might first utilize Visa's signature debit routing network and then switch to Visa's Interlink for their PIN debit network routing. Because there was no competition, there were increased fees, which forced the cake shop's owner to raise the cake prices. Because increased competition leads to lower prices for consumers, the Durbin Amendment necessitates that they go via 2 independent sources first. While this is going on, there is a battle going on between 2 opposing sides over it. On the other hand, there are banks and credit card networks, and on the other, there are businesses. The customers make up the third side, which is less frequently discussed because most people are unaware of its existence or function. On the other hand, some have claimed that it is in everyone's best interest to back this amendment because, first, without it, debit network routing would be monopolized, and the card networks could unilaterally decide on the debit interchange rates without any form of competition. Second, without regulations in place, businesses would be forced to pay greater interchange fees, which would be passed on to customers in the form of increased pricing. Third, international card networks, which have poorly promoted transparency and dislike any forms of competition, control the U.S. bank card acceptance industry. We'll pay greater fees because the U.S. lags behind other countries in accepting payments internationally in terms of competition. Fourth, the cap has been lowered, decreasing the average interchange fee from 44 cents to 21 cents. Fifth, in the first year of Durbin Amendment, it generated 37,000 new jobs. Sixth, consumers in the U.S. saved $6 billion. And seventh, the percentage of transactions that are free of charge increased from 53 to 61%. A small business owner might be charged a 2.25 fee plus an additional 30 cents, followed by a payment of 0.05% plus 21 cents to cover the Durbin cap. The small business owner gains nothing from the Durbin cap. The only thing it is actually doing is transferring money from their wallet to financial institutions. After conducting extensive research on the consequences of the Durbin Amendment, George Mason University concluded that the large box retailers and their investors stand to gain the most from this cap, while lower-income households stand to lose. According to the study, large corporations save 30 times more than smaller companies. For instance, on an earnings call with Home Depot, a worker speaking on behalf of the company informed the stock analyst that the Durbin Amendment increased Home Depot's bottom line profits by $35 million annually without any intention of passing on the cost savings to customers. And there are three primary reasons for this. To begin, larger establishments such as shopping malls and department stores have more leverage when negotiating with the issuing bank for a cheaper merchant service charge. Second, since most people buy from their preferred stores anyway, big businesses have less incentive to pass on the savings to customers. 3. Since small businesses have not witnessed a decrease in their merchant discount rate, they have no savings to pass on to customers. As a result, they are less of a concern and competitor to large corporations, who otherwise would have had to pass along their savings to customers. But if the ordinary customer learned the actual cost of supporting the Durbin Amendment, they might rethink their position. In addition, during the same period from 2009 to 2013 when everything was passed, the average monthly charge for non-free accounts doubled, rising from $6 to almost $12. As a result, nearly 1 million more individuals became unbanked, primarily from lower-income households, negatively impacting the economy. The article continues by stating that, overall, the Durbin Amendment has resulted in a significant wealth shift from small merchants and consumers with lower incomes to major retailers and their shareholders. Hi, it appears that you've reached the end of this video. Thank you for watching this far. If you've enjoyed what you've seen, please subscribe to the channel, click the like button, and share your comments in the comment section below. This is Finance Sense, where we help you stay up with all the current developments in the financial markets and the economy. Stay safe and look out for the next video.